Why would I say that? Because the U.S. government has reclassified them both as critical minerals. And the U.S. government is in talks right now. Let me see the name of the company. They are in talks right now with, bear with me one second, they're called Orion Resources, Orion Resource Partners. The government is in talks with them, U.S. government, to set up a multi-billion-dollar fund to invest in critical mining, minerals mining project. What is known, the U.S. Internal Development Finance Corporation, DFC, is in negotiations with Orion Resources to create a $5 billion fund for critical minerals project. The U.S. aims to secure supplies of minerals like cobalt, copper, silver, rare earths, etc., which are essential for defense, advanced tech, and reducing dependency on foreign supply chains. So again, when you talk about now silver and platinum being added to the critical minerals list, you have massive investment coming in. And at some point, you're going to see the industrials like Tesla battle the investors like hedge funds and now the U.S. government to get supply, and they're going to be fighting to get supply in what is a diminishing product. Silver is diminishing in nature. That's why it went from 16 to 1 for 5,000 years to now to 7 to 1. But the reason they can't do it indefinitely, Sarah, is because the market has caught on to them. And the big money in the rest of the world, in particular in the BRICS countries, has figured it out and is standing for delivery across the board. I'm going to read to you a couple of things here that might help explain just how crazy it really is right now in London in the LBMA right now. So far, there has been, in the month of August, 58, since late August, rather in September, for the September contract, so far about 60 million ounces has been delivered of silver, 10,550 tons year to date. In London, where it is known as the global delivery mechanism, they're trading minimum of 600 million ounces of silver per day. They have standing contracts of about 2 million ounces in paper claims, yet they only have an available float, as they call it, the bars that are available backing these claims, of 140 million ounces. In other words, there's virtually no free silver left to meet demand in London. And so
that's why they had to reclassify it as precious mineral, because
as critical.
They need it. Yeah.
And it's up 43% this year. But here's a couple other things that are crazy that signal how close this is to breaking free. And this was an article that I read in Bloomberg, and they're confirming that the London 1-year implied silver lease rate is between 5 and 6.4%. Now, the lease rate would be, if you want to short something, you have to lease or borrow the silver, or in a stock, you borrow the stock and you naked short it. Stock you don't own, you borrow it at a lease rate. Now, normally, or if you have to cover and you don't have the metal, you can lease it and borrow it, cover it, and then pay them back. But the point of it is that over the past 2 decades that I've been 3 decades I've been doing this, 1 month, 3 month, 6 month, and year lease rates on silver are typically well under 1%, a half of 1% or better. And even in really crazy times, it barely gets above 1% and usually only briefly. Right now, they're as high as 6.4%, and this indicates massive tightness in available supplies. It means that the holders of silver are demanding unusually high compensation to part with their metal, even temporarily. And to your point, how long can they do it? These paper claims are crumbling, and the big industrials, the sovereign funds, the retail investors are all scrambling for more silver. And when you add it to the strategic minerals list, that means, and add it to the deliverable silver in London vanishing, if investor needs and industrial demands collide, which I believe they will, and you put a floor underneath it because the U.S. government is buying it, you're talking massive, 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 massive upside potential. Now, one last thing I'd like to say about technical analysis. We are at the tip of a 45-year cup and handle pattern. You got the cup, the dip to the handle, and then, so anyways, this 45-year cup and handle pattern, it's the most powerful technical setup you can find in markets. And in particular on such a long, long time frame, and it carries huge implications. It basically says that 45 years of suppressed energy is about to be released, coiled like a spring. And here's how it works. If you take the cup, which is the top of the cup, in silver's case, you could call it the 1980 peak of $50. Through the decades of consolidation, the handle is the pullback and the tightening range. That would be since 2011. But once the price breaks out above the rim of the cup, which would be above $50, the pattern signals a massive new secular bull market. And the way that you calculate where you would expect it to go next is that the rule is you take the top of the cup at 50 and then the depth down to about $4 in the early 90s, even a little bit less. That's $46 difference from 50 to 4. You add which is 46. So you add 50 plus the dip, 46, you get between $90 and $100 would be your initial target, $96. That is technical charting right there. It doesn't get bigger than that. So, you put all of this together, massive imports into the United States, like no one's ever seen this amount ever. Huge delivery problems in London, massive rehypothecation in London, 2 billion ounces in contracts that could stand for delivery with 140 million ounces available. What could go wrong? 6% plus lease rates. They're always about 12 to 15 times lower than that. I mean, the whole thing. And then now a critical minerals list. It's telling you that there is a floor under silver and that the upside is extraordinary. And you look at gold being... Everything that I see tells me it's being pegged to a new monetary system, and Tether showing up at this big meeting in Beaver Creek. They asked me to come, but I had other obligations, and I would have loved to go speak there because you have the very inside information going on there about gold. But when Tether is there going directly to the miners to talk to them, it supports everything that I am thinking, that they want a weak dollar. And if you have a weak dollar, you have Tether buying interest rates or buying treasuries, which lowers interest rates, right? And strengthens the bond market. And then they put the proceeds into gold and Bitcoin. It lowers the dollar, but it pushes those two things up, which they want a strategic Bitcoin reserve. They've told us that 100 times. And they want gold back in the back of the treasury. 10, 20, 30, and ultimately a 50-year treasury, all redeemable in gold. Everything is coming together, Sarah. And the moral of the story is you stay in dollars, you're destined to go broke. I am 1,000% positive of that. I don't care what you want to put, what asset you want to choose, but being in dollars right now, they're telling you they want to devalue dollar, and you're going to see it. And one last thing about gold, Goldman Sachs came out and said, well, if the market even believes for a second that the Fed has lost its independence, gold will go to 5,000. Well, Stephen Mirren is still an advisor to Trump and working on the Fed, and he is the advocate of, or the author of, the Mar-a-Lago Accord. Yeah, well, I mean, I think it has a lot to do. I mean, it's catchy. It has a lot to do with him and his administration's viewpoint, economic viewpoint, and Mar-a-Lago is synonymous with Trump, so I think that's why they call it that. But the whole thing all fits like a hand in glove. It truly does. And so the days of manipulating the market, I believe, are coming to a drastic end. You can only manipulate a market for an extended period of time, all the time you're speaking of, by pushing it in the direction that it is going. We have an administration who understands right now that countries really don't want our treasuries anymore. They don't want it because of weaponization, because of inflation, because we'll never get our balance sheet in order through austerity and the tough decisions. And so you're seeing more and more inflation and a devalued dollar and lower interest rates. I mean, there is no reason that countries would want to continue to hold our treasuries. I think ultimately the lower interest rates backfire and you see much higher interest rates, which destroys the bond market. And the last time, a year or two ago, when they tried to lower the front end of the market, right? The federal funds rate, which they just lowered yesterday by 25 basis points, they lowered it by 100 basis points over a few meetings. That's 1%. The 10-year Treasury went up 1%. You're seeing that in the UK right now, 7 rate cuts, and their 30-year Treasury is at the highest level maybe ever. Point is that they can control the front end. The back end of the market is controlled by the bond holders, the bond buyers, and they're saying, we don't want this crap at these rates. You want to lower the front end and play these games? Well, we're going to sell our treasuries and our bonds because we expect a much higher return for what you are signaling is complete and total lack of financial or fiscal responsibility. Once again, you're continuing to print and inflate at the tune of $1 trillion every 100 days. So this is a very dynamic time.
Well,
but
go ahead, finish your thought.
No, I was just going to say, I'll tell you that I truly believe that gold and silver are becoming integral to this administration's understanding of
I think so too.
macroeconomics right now.
I think so.